quarter results for 2014. I have with me today Mr. Vikash Jalan, Mr. DK Agarwal, and Mr. Ashok Jain. Vikash will start the ball rolling with some of the financial results, and then Mr. Agarwal will go on to explain. And after we finish the presentation, we'll have plenty of time for some Q&A. Thank you. So, you want to start now?
Good afternoon. I'll take you through the financial highlights for second quarter of IVL. Second quarter revenue, we saw 64 billion Thai baht, which is $2 billion, a growth of 13% year on year. In the first half, we achieved a revenue of 126 billion Thai baht, which is a growth of 12% year on year. Second quarter core EBITDA, after adjusting inventory gains and losses, 5.1 billion Thai baht, a growth of 19% year on year. The same core EBITDA first half 2014 reported 10.2 billion Thai baht, which is a growth of 44%. Our core net profit in second quarter is Thai baht 1.34 billion, which is a growth of 8% year on year. First half 2014 core net profit 2.9 billion Thai baht, which is a growth of 158% year on year. Net operating debt to equity remains at 1.14 times. Just to clarify, net operating debt is net debt minus the non-operational debt, like the project debts which are not contributing to the earnings. We have a liquidity of $1.2 billion. In this quarter, we have completed the acquisition of PHP Fibers, a leading global nylon 6/6 airbag yarn supplier, on 30th of April. This company has footprint in Germany, US, and China. And we also completed the acquisition of Turkpant, which is a PET plant in Turkey, and it was completed on 2nd June 2014. Moving on to core financials. As I said, 64 billion Thai baht revenue in second quarter against 57 billion Thai baht same quarter last year, a growth of 12%. Core EBITDA was 5 billion against 4.3 billion in the second quarter last year. Depreciation have increased in line with the growth in the volumes. Interest has gone up also in line with the volumes. Current tax and deferred tax, so core profit before tax was 2.2 billion Thai baht against 1.8 billion. First half this year is 4.5 billion Thai baht against 2 billion, increase of 122%. Current tax and deferred tax, as you know that we have adopted the deferred tax accounting since last year, but current taxes remain low. It remains about 10%. Current tax is basically the tax which is a cash tax, cash component that we need to pay. As we said that from the second quarter, we are forming the regional operating headquarters in Thailand, which is already operational and have started to bring the synergy and savings. And our current tax remains below 10%. Joint ventures, we had a $200 million loss against $79 million last year. This is mainly because of the startup of Polyprima, which is a joint venture in Indonesia. And we have 43% stake in that company. And as you know that PTA business is passing through the trough. And so we are doing certain projects to turn around, basically reduce the cost. So we'll talk more about it in the later part of the presentation. Non-controlling interest went up compared to last year in second quarter to this year second quarter, is mainly because of consolidation of Travera. As you know that Travera was a joint venture up to 30th of September last year, and from 1st October we have started consolidating Travera in IVL. So non-controlling interest has gone up because of this, mainly because of this. Core net profit remained 1.4 billion Thai baht against 1.2 billion last year. Net operating debt remained 72 billion against 70 billion last year. And net operating long-term debt to equity remains below 1. And a reported core return on capital employed of 9.2% in this quarter. this slide gives you, we always talk about core financials. Core financials give you the operational results before the extraordinary items. So on this slide, we are giving you a reconciliation how the operating performance or the core performance is reconciled to our reported performance. So core net profit of 1.4 billion, we have an inventory loss of 127 million Thai baht, and net profit before extraordinary items remained at 1.2 billion. Then we had $274 million of extraordinary income this quarter, which mainly belonged to booking of gain on bargain purchase. As we said that we have completed 2 acquisitions in this quarter. The acquisition of PHP Fibers in Germany and also the completion of acquisition of Turkpet, a PET plant in Turkey. So we have booked, on PHP, we have booked $1.1 billion gain on bargain purchase. On Turkpet, we have booked around 600 million Thai baht. Impairments on Workington, as you know that we mothballed Workington, a PET plant, in the beginning of this year. And in this quarter, we have taken an impairment, partial impairment on that, around 600 million Thai baht. And Otana, we have taken an impairment of 669 million Thai baht. So net, we had $274 million of extraordinary income. So normalizing that, our net profit, reported net profit after tax and minority was 1.5 billion Thai baht against 200 million Thai baht same quarter last year. Cash flow remains strong and very healthy in the first half of this year. We reported $397 million of operating cash flow, which is also primarily because of healthy operations and also from the inflow from working capital. As you know that in the previous slides, you saw that we have inventory losses, which means that the prices were going down, the absolute prices. So the working capital requirement was lower and we had a working capital inflow. So we benefited from that also. And the operating cash flow in the first half was $397 million. We spent $211 million in the capex and investments, growth capex and investments, which include the acquisition of PHP Fibers, Turkpet, and also the ongoing brownfield and greenfield expansions. Net financial cost was $54 million in the first half, and we paid dividends of $23 million, and there was a decrease in net debt by $55 million. You can see from the graph that the last year we generated a cash flow from operations of $38 million, and in the first half itself, IVL has created $397 million from operating cash flow, which is partially because of inflow from the working capital due to the lower prices. This slide is the financials giving you in the form of the volumes and on a per ton basis, like we look at our performance on a per ton basis. You can see in the first half, the volume grew by 8% compared to first half last year. Core EBITDA per ton, after adjusting the loss of profit from the flooding in Thailand, reported basically $100 per ton in first half this year compared to $78 per ton in the first half of last year, showing an improvement of 28%. This is very important. This core EBITDA per ton reflects the healthy performance and also the change in the mix. Like last year, MEG production was lower in the first half because of the shutdown. We took turnaround for 2 months and for the catalyst change in US. So we had a lower production in MEG, and which has come back, the volume has come back in first half of this year. So partly is because of that. And reported LOP adjusted core EBITDA was $308 million in first half against $224 million in the first half last year, a growth of 37% year on year. On the balance sheet, we have a liquidity of $1.2 billion as of June 2014. Our total net debt is $2.4 billion. Debentures 25%, short-term loan 13%, and long-term loan at 52%. We have a liquidity in the terms of repayments as well. You can see that 4% of the long-term debt needs to be paid in the next 1 year, 12% a year after. So this creates a lot of liquidity in terms of cash, and which can be used for the further expansion and the needs for the company. Our interest rate, effective interest rate, remain at 4%, and we have a credit rating of A+.